Hey everyone, and welcome back to Grumpy Monkey Trading. I hope you had a great holiday season and are looking forward to an exciting investment season in 2016. You probably noticed that it's a Tuesday right now, and I don't normally do Tuesday shows, and that's because this is a new show for 2016 called We the People, where I take suggestions from you guys, the audience, on stocks that we should review. A very small number of stocks that we can do a longer review of. So a longer term, medium term, short term stock charting review where we then can compile some of those conclusions together, and then I'm going to reach out into your universe and pull out some tweets, some stock twits, maybe some interesting charts that I've come across recently that we can talk about a little further. So these will be longer analysis than Bananarama, which I think is going to be cool because Bananarama is fun. It's a good fun show, but it's a very brief analysis, a very skimming the surface into stock charting. So this is going to be a new way of doing it. So share this video, like it, provide comments, propose new stocks to look into for future shows. This one's going to be a regular one. So with that, let us start out with We the People. Our first one of today is Nordic American Tanker Shipping, NAT. This was proposed to me by Paul, who liked the mission statement, which was basically the oil has to go somewhere, so we might as well get paid to hold it, which makes perfect sense to me. Certainly you cannot just lay oil randomly in a field or hide it under your mattress next to your socks and dirty magazines. It does need to go somewhere, and someone has to pay you to store it and move it around. Why not Nordic American Shipping? This was probably a little more positive when it looked like oil was going to turn the corner, but now oil is back kind of in the dumps. This leaves this stock chart kind of in waiting mode. Basically, we had this nice long run up starting in 2015. This is a weekly chart into late 2015, and now we've hit this stabilization period. You can see that we have two support lines, basically. The extreme support line that if broken, that would basically say like downtrend, which is currently around 13.5. The middle support line, which is more at 14, so that would be a concerning one to break, but not necessarily a deal breaker. And then we have upper resistance lines at just at about 15.75 and 16. So you would need to say it was starting a new upwards trend, you would need to break those on the high side. What we see though is very clearly for the weekly chart is that we are in a symmetrical pattern of just kind of bouncing between these two red lines. You can see these are two symmetrical slopes, indicating that we are in that sort of range-bound horizontal movement looking for some sort of breakout. The nice end of this stock is that you do get a very healthy dividend. So you get a 9% dividend, which is really healthy. It can also be an item of concern though, because a high dividend kind of indicates that they're buying your interest in the stock to ensure that you hold it. But on the financial side, this stock did indicate that its financials were improving. When we look at things like the stochastics, we can see that we are nearing the upper boundary. I wouldn't trust the values of 80 necessarily too much. You still want to draw support and resistance. So you can see that probably in the next week or two, we'll be hitting an upper resistance part. And this is really revealing the ultimate oscillator. We are just nicely pinging here, and that's actually more of a descending triangle where we have a solid bottom, and then we have not as high peaks every time. So lower peaks as we work our way down, those tend to break downwards. So that is also not a super positive indicator. But overall, we are sitting in this range bound. If we look at the daily, we see a more precise version of the sideways pattern that we saw on the weekly chart. So we're able to draw more precise support and resistance lines to kind of see where our different channels are within this pattern. So you can see that we previously tested the upper boundary of the resistance lines here last week, but we've quickly fallen back this week based on some of the China slowdown news and the general freak out of the market, which was super fun. But we are holding this support line that we'd previously broken, which is really important, particularly today where we'd slipped back below it. And then before the close, we're able to reassert it. That's so important as sort of a like check mark on that support line to plow through it and then reinforce it at the end of the day. That is a really positive sign. If it's not able to maintain that though, it's going to fall between these two lines here and really rely on these support lines down around 1425, that kind of lower area that we talked about previously, to prop it up. If we look at these hourly charts, we see that we were in this upwards channel that we have now viciously broke out of today. And then in the last 2 hours with volume, the stock came back and challenged that line, but it was not able to get back through it. So on the daily, we saw that it was able to hold that support line. But on the hourly, we see that it's not able to break through this previous support line that it held so many times previously later in December. So what that says typically, if it's not able to break through, is that that is going to fall back because it challenged the line and wasn't able to hold it, which would indicate some more downwards pressure. If we look at this stochastics, it was oversold at that point, so it deserved a bit of a bump back, and it could do kind of one of these and crawl back in, or maybe make it back to 50, but I expect it will in the morning probably challenge a little higher and then start to slip back down. So what we see is a pattern that could turn bearish. All right, so what's going on with NAT when we combine all that analysis? So we had the long term where we were range bound between about 14 and 1575. So it's looking for establishing a new trend. If it were to go lower, then that would be a new bearish trend. If it were to go higher, that would be a new bullish trend. We were in that symmetrical pattern. Those tend to break in the direction of the original trend, which was bullish, to get us there in the first place. In the medium, we needed to hold that 15 level, or we're going to start to challenge some of those lower support levels in the 1425 range, or some of the ones that we defined in the long-term chart. And then the short-term, that looked doubtful. That looked doubtful that we would hold 15 because we broke through that lower support boundary on the 2-hour chart, and then we were not able to regain it at the end of the day. We were simply able to challenge it. That tends to be more of a bearish pattern. So it will really need to reinforce it tomorrow to get back in that channel. Otherwise, it could be a bearish short term where we look to challenging some of those lower marks. If we think about this long term from an analyst perspective, it's not well reviewed, but analysts did have holds and a buy at about 15, which is the level we're at currently. So presumably it needs a new review. What you can hang your hat on is a 9% dividend, which is nothing to sneeze at. If you are just biding your time between that range of 14 and 15.75, that's not a bad way to spend your time collecting a 10% dividend, nearly 10%. If I'm holding something for the long term though, then I like to sell options against it. And those options for NAT are not very lucrative. The spreads are fairly significant. The volume is not present, I should say. And the gaps between the prices are not super tight. So it is not lucrative in that regard. You are basically hanging your hat on the dividend and the hopes of something to think about, which is, can be summarized by the street very accurately, which is the oil ban is over. So presumably if the prices of oil increase, if shale gas goes back to booming and we can export oil, then that oil needs to leave the country some way, somehow, and that is going to be through a tanker. So potentially the tanker business would grow because of that. But until things with the oil industry are straightened out, we just don't know what's going to happen. Obviously, we're not moving away from oil anytime in the short term. Entirely as a planet, so there's going to be demand, but we need some economies to improve, and particularly China getting hit recently did no one any favors. So that's it. That's our first episode of We Are the People. In the future, I will try to do at least 2 stocks, but as a first training run, I thought this one should just be 1 stock. So thank you for watching, and I hope you enjoyed the show.